Volume trading strategy without using indicators. Explained, shared with you, secrets, here we go. All right, so what we have on our chart here is, you'll see, of course, we have price at the top. So these are price bars up here. And then we got volume bars down here. Now, the first thing that I want to share with you to help you really understand in depth the strategy and why this works is that these volume bars down here, we call it volume, and it is. But I want to invite you to use a different term for it to help you understand why it's so effective to use volume. And let's substitute the word volume for money. Right? So money is what we're looking at down here. Money coming in and out of the market. So when you think of it from that perspective, it really gives you a different angle, a different mindset, a different understanding, and you can apply some very clear logic to it to say, all right, let's follow the money, honey. And you know what? Really, that's what all of trading comes down to, is following the money. More demand than supply, prices go up. More supply than demand, prices go down. Period. The end. So trading is not really that complicated. People overcomplicate it with all kinds of theories they impose upon it, etc. Indicators, yada, yada, yada. Some of those things can be very helpful. I'm not saying that they aren't. But volume is the thing, again, when we think of it as money coming in, and in the markets, money makes the world go round. Now, in regular life, the rest of life, money does not make the world go round. I do not believe that. I believe that love makes the world go round. But in the markets, not so much love, especially for regular traders. So we've got to look at the money. And what I have a little famous slogan. I love to quote myself. Who doesn't? And that is, we're going to hook our wagon to the whales. So I take my money and I put it in my little red wagon here. I tie one end of the rope to the handle of my wagon, put the other, or tie the other end of the rope to the whales, meaning the big money, and let them take my money with their trades. And that's really it. I mean, that's trading in a nutshell. Really? Is that complicated? So let's look at what we have here. And so again, when you think of it as money, then things become much easier. So let's see, we got price going up, up, up. Okay, so let's look at this move here from here to here. And so with price action, you would say, oh yeah, we've got a higher high. And we do. Definitely have higher high. So this is where pure price action trading has its faults. Pure price action trading, pure, I love how they use the word pure, like they're the Virgin Mary of trading or something, is no so bueno. It really isn't. Just what price is doing is not the most important thing. I would actually say that volume, or the money flow, is more important than the price action. So when we look at this, okay, price is going up, but what's going on with volume down here? Not a whole heck of a lot. In other words, it's not increasing. So again, using our terminology, is volume is money coming into the market during this time. And no, we're not getting a lot of money coming into the market, right? So we've got this high of volume over here. And by the way, you know, people use price action and they refer to higher highs as a way to measure price action, which, yes, it is. But we can apply that same principle to volume. So look at this. Do we have a higher high on volume from over here? No, we do not. We actually have a lower high. So higher high on price, but actually a little bit of a lower high on volume, meaning not as much money is coming in. So not as much demand. Remember, it all comes down to supply, demand, imbalance. So, okay, we got price coming up, but there's not much strength or money flow or demand coming into it. So that means who is not trading this? The people with the big money. And who has bigger money? Retailers, amateurs, or institutions. Let's face it, institutions trade with billions of dollars. In your average, person trading from home, your mom and pa trading at their kitchen table or at their laptop or on their cell phone, they're not trading with billions of dollars, let alone millions or even hundreds of thousands. It's just not even close, right? It's a complete disparity. So But it's the institutions that are the professional traders, and by definition, a professional trader is someone who makes money. So wouldn't you rather trade with the professional money? Again, hook your wagon to the whales. So I'm not going to hook my wagon to the amateurs. And when I see this coming up, I'm saying, oh, the market's moving up, but on weakness. So if we look at this, and that's what money is. Money shows strength or weakness coming into the market, and it's moving up on weakness. Now, therefore, what do? Well, we do nothing there. We wait. We say, oh, I'm not going to buy that move up. Instead, what I'm going to look for is, when does the big money come in? When do we make a higher high on volume? And it comes in. Let's cross that over there, right there. So now we got a big volume bar, creates a higher high on volume, and we got a big red bar on price. So actually, I don't want to trade with the trend. The trend is not my friend here. This trend is not my friend. This trend is my enemy. And I want to trade against the price action. And now we have a form of price action here in a large, wide range red bar. But the key is, it's like, yes, I want to use price and volume. And of the two, I got to tell you, volume is the more important, because it is the money, and people are very serious about their money. So when they bring in a lot of money, that's money being taken out of their trading account. That money is gone. It's out of their trading account. It's out into the wild marketplace now. And so that is actions. Actions speak louder than words. And in the market, actions are people sending their money out into the risky marketplace. And here they are. And so this, I would rather not take this long, I'd rather take this short. And it comes back down and down and down and down and down and down and down she goes. And that is the kind of trade that I like to take. So what I want to share with you, everybody who watches my videos, meaning you, I give away one of my my favorite tools. It's my market entry timing indicator. Feel free to get it at indicatorwebinar.com. It's a recorded webinar, by the way, so you can watch it whenever you want. I give you the indicator, show you how to set up the charts and how to trade it. So it is a complete tutorial about timing your entries to the penny, to the pip, to the tick. It is my precision entry indicator. It's actually the indicator I use on every single one of my entries, whether it's a trend reversal trade like this or whatever. Also, highly encourage you to subscribe to the channel. Actually, I'm going to do a little series on volume trading. So this is just part one of the series. So in order to get the rest of the series, just subscribe to the channel and click the little bell notification. And that way, when I come out with further tutorials here on volume trading, you will get those as well. Oh, finally, in the comments below, if you have any questions about this, or you know what I'd really love, if you shared your favorite volume indicator. Share with the rest of us what your favorite volume indicator is in the comments below. Be very curious to see that.